they've sort of reached a capitulation phase and everybody is freaking out. And because everybody is freaking out, they're contributing to the sales. So they've sort of reached, sorry about that, that was YouTube Live that was interfering with the flow. So as I said, because of that, the sell-off is cascading, as it were, and that's what's contributed to that. But as I said about 2 weeks ago, or was it 3 weeks or 4 weeks ago, that usually since the beginning of this bull run, we've been having like 3-4 month cycles of peak and troughs. So if we go by, the examples I've given in the past 16 months, you find out that we have like 4 months up, 3 months down, 3 months up, 4 months down. And that has been, we've been swinging essentially that way. And if you look at what the weekly chart shows, let me just expand this. That's probably what I'll stay on for most part of today. You'll see that, for instance, after the let's take September last year. Where's September? Yes, September is now so small. Can you imagine? So after the peak in August last year, we had about 3 months of downtrend, and then the market started to pick up from September to October, flattened out pretty much for the most of September, then went up from October, November to January. So all this all the way to December. And then in January, we had that 2 weeks of dump to hit the bottom at the end of January. And then we went all the way back up till we got to March, April. What we did get to April was when the market tanked for the first time. That was around 65K. Then we started coming down all the way to May. We were close to the bottom in May, but we reached the eventual bottom in June, and then we retried it in July. After the retry of the bottom in July was when we went up to 53K, and then came down to 39K before going up again to 70 or 69K, depending on which exchange you're looking at. So what I'm trying to say is that we're basically oscillating between two sinusoids, as it were. So from last year, essentially from 2020 to now, we've been within this range. So let me switch my camera for the purpose of, for the benefit of the guys on Instagram. Yeah, this is, yeah, I'm just gonna use it this way because I don't have time to set up today. So we've been essentially within this range. Let me just draw these two purple lines that you're seeing is where we've been since pretty much since December last year. And there are many schools of thought about where the price of Bitcoin will go and where the price of Bitcoin will start, making a reversal. But one thing that is important to note is that we've been swinging in that range. And I did mention, if you remember, I think that was either 2 weeks ago or 3 weeks ago, I mentioned that I was expecting the price of Bitcoin to touch the lower end of the standard deviation, which was represented by the Bollinger Band. Hold on a second. Let me adjust the screen for the people on Instagram just so we have a better view. What I was saying there was that the Bollinger Band represented the standard deviation of price, and that the price was swinging between the edges of the Bollinger Band. So the first time we touched the edge of the Bollinger Band was in March. 4 weeks later was when we peaked out. Then we came down to touch it again in June last year. 4 weeks later was when we started to bounce again. So we touched it again now last week. And I think I mentioned it on the WhatsApp group last week that we touched the Bollinger Bands now. I've been waiting for us to touch the Bollinger Band because since the market started crashing in November, we've not touched the lower limits. So the lower limits, or the lower limits of the Bollinger Band is the lower standard deviation, and the price really moves according to the upper and lower standard deviation. And it's a very good gauge of price action, especially when you're looking at a very high time frame like the weekly time frame that we're looking at right now. Now, based purely on this, and I believe a lot in this particular technical analysis, because the price reacts very strongly around this region. So we've seen now that we've had 2 weeks tapping on the lower end of the Bollinger, and we've not been able to make any decent low beyond, essentially beyond 33K or 32. In this case, it's about 33K, really. It's 33, it's 32,900 or thereabouts. Yeah, the low was 32,983. So we've not been able to make any significant indentation on price below 33K, below 32K. The confirmation of this bottom is actually the next week that we're going to get into. And what I mean by that is this. We've made a bottom here by touching the lower end of this standard deviation last week. We've touched it again now this week. Next week, when the price collapses next week, which is going to do, if it dumps and we're not able to close below 34K, or it's not able to dip below 34K, that's an imminently confirmed reversal. Now, if we dip below 33K, which is where this week's low has been, if we do dip below 33K, then we might expect another 2 or 3 weeks before the price makes a reversal. But as it is now, if we have a dip next week and it's not as low as this week's dip and it's sitting around 34K, what it will mean on a lower time frame like the daily is what you call a head and shoulder, in which case, an inverse head and shoulder, really, not just head and shoulder. In which case, this will be like the shoulder, and then you expect another shoulder to form somewhere here. That is definitely a reversal sign, and if it's happening on the weekly time frame, you can expect that the market makers and institutions are going to react accordingly, and then the market is going to start behaving in an opposite manner. So, as I said earlier on, and as I said during the London Crypto Summit last weekend, I think we have about a week, or between a week and 3 weeks more before we start seeing price correction on the current price of Bitcoin. So I've also had questions like, okay, can we go to 20K? I don't think we can go to 20K. I can give you a lot of reasons for it, but simple reason, just to put it in perspective for anybody that is wondering why. There is a principle called demand and supply, and this principle applies across board for all sorts of commodity trading, just not just crypto, forex, corn, crude oil, gold, anything, copper, silver. And it's the principle of demand and supply zone. If you take a snip of this zone, you will find out that in the last dip, that the last real dip, that was last year's dip, that was last year's low, we were in this zone for almost 90 days. So if let's 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. We were in that zone for 10 weeks. That's 70 days, almost 80 days. And the market just couldn't get through that zone. We broke into that zone, bear in mind, in December 2020. And since we broke into that zone, the market has not been able to effectively go below that zone. That zone has always been captured. So it's a very significant demand zone, as shown by the chart and as shown by what I just dropped. So I expect the price to bounce. As you can see, just getting close to it, the price has bounced off this zone. And you have what you call a constellation or a confluence of variables. In technical analysis, means that 1 or 2 or 3 or 4 things are agreeing with each other. So if you were to go by just that principle alone in technical analysis, What it means is, one, we have an oscillator like the stochastic RSI saying that we are in oversold region, which means a good place to buy. We have the Bollinger Band, which is a measure of standard deviation, saying that we are at the lower limits of the standard deviation. Then we have this demand and supply zone showing us that, well, our, what's it called? The price of Bitcoin has a lot of offers, a lot of demand in this zone. Then on top of that, as if that's not enough, on top of that, you have this legacy, what I'll call Fibonacci lines. I can't go into the details of what Fibonacci line means, but these are mathematically derived price points that provide support and resistance, or supply and demand lines for the market. It's a pivotal one because it's a 50% Fibonacci line. The 50% Fibonacci line is the actual line you expect the price to get to if it's making an upward movement. If a price gets to 50% Fibonacci and is not able to break it, it's a healthy movement. So here we found out from, of course, from previous experiences that the price could not break through. And even when it did break through for 1 week, it quickly went back above it and we've not been able to recapture that line below that line. So if you put all of these variables together, I mean, that's more than 5 or more than 4. It shows that there is valuable, significant demand at the 33K, 30 to 34K level, essentially. So that makes it a formidable zone for the market. And if you bear in mind that many of the institutional purchases that happened just below this zone. So it's also a very, very critical zone to consider. Let me switch on a number of, okay, if I switch on this indicator as well, which is what you call exponential moving average ribbons, it shows that this is the last bottom, like the last line of the exponential moving average ribbon, which shows the 100 exponential moving average. And it shows that we're also bouncing off it. So there's just way too much technical confluence around this zone to make the price go any further. I can add another one out of my toolbox to show you. That one shows on the daily chart. To show you, so this is the daily chart. This red spots or this red area is the production cost of Bitcoin. It gets automatically charted on this chart. So it shows that the current production cost is sitting around 34,178. And as you can see, immediately the price touched the production point, just bounced off like a spring. So believe what you may, and I mean, there are a lot of YouTubers and Twitter guys telling all sorts of stories, but the chart will tell you all you need to know about sentiment, about price action, about market direction. So what this tells me is that we're gonna see a very strong rebound. And like I said, I think on Twitter, Bitcoin very rarely makes a V-shaped reversal. It usually makes a W-shaped reversal, meaning when the price bounces off up a particular level, it tries to test that level again before making a conclusion that it's a no-no. So especially on the, I mean, not just on the higher time frame, from 4-hour time frame, you see most of the time that Bitcoin makes that kind of reversal. And just for reference, the last time that we were in the range of production costs was last in 2020. That was before we started getting institutions involved in the matter of Bitcoin. So since September, October, when MicroStrategy came out to announce that they were buying Bitcoin, we've never come close to production costs. This is the first time in more than a year that the second time in more than a year that we're coming close. We came close last year as well, but you can see how the price reacted when we came close. It just kept bouncing off and bouncing off. So what I'm saying essentially for people who have joined the call to know whether Bitcoin is going down or going to zero or going to crash, or crypto is going to escape somewhere into the atmosphere, it's not going to happen. I was thinking we might go to 28K or 29K before the beginning of this week, especially when the week started with the stock market crashing, I was thinking, okay, maybe we're going to get 29K, but the way the market bounced off to 32K shows that there is very, very heavy demand in that region. And if we keep hitting on it, eventually the sellers will get exhausted and the market will start to climb up. Now, I've started with the technical, which is very unusual because I don't have any slides to show you today. As I said, I just came inside from a road trip, sort of, and I don't have anything prepared. But I started with technical so that people will understand where we are. You know, they said if you don't know where you are, I mean, if you don't know where you are, you should at least know where you are going. So I've shown you an idea of where we are. Now, to show you an idea of where we're going, I'll talk about the fundamentals after this. I usually make reference to this monthly chart. And the reason I make reference to the monthly chart is because the monthly chart is so long-term that you can't go wrong. It kills basically all the noise that you might have, all forms of noise. It kills it completely because it's devoid of the volatility of intraday traders and institutional traders. So if we were to chart this on the monthly chart, as I said, what we're seeing is we're seeing a bounce of the 50% Fibonacci up on the first impulse. Now we've taken a double top as a technical pattern. We can say this is a double top. We've seen that double top play out here. But we're also now almost seeing a double bottom. So the month ends on Monday. We're not likely to close below 35,000 for the month. And the reason I say we're not likely to close below 35,000 for the month is because we already tried 32,000 this week and it didn't work out. As you can see, we're sitting clearly above 34,000, which is the 50% Fibonacci. The 50% Fibonacci is the golden ratio, which you expect a price reaction at 50% Fibonacci naturally. It's just a natural reaction. So I'm not surprised that the market has reacted that way. So on a multi-month level, I expect that February is going to start by attempting 35K. Once it doesn't work out, after a few tries, the price will start to go up. Now, where will the price go up to? A number of theses are on the cards. One is the price can go up to 81K, which is the next major level, or the price can go up to 100K, which is the second level. My money is on 81K. I'm not saying you can't get to 100K yet, but my money is on 81K, and the reason is that there's too much headwinds in terms of events that are happening or that are expected to happen this year that will affect the price, which brings me now to the fundamentals of what is affecting the price. One of the fundamental things that's affecting the price is the price of the stock market. And as I've explained before now, the stock market is affected in crypto because institutions are now placing big money in crypto and in the stock market. And anytime the stock market is crashing, institutions use their crypto money as liquidity to provide them hedge as in HEDGE, to provide them an hedge in the stock market till the stock market recovers. So the liquidity of the crypto market really provides them that. So anytime you see the stock market crashing, you can expect to see the crypto market reacting in a similar manner. So let's take, to illustrate my example, let's take the daily charts. Yeah, daily charts is a good example. The daily chart, this is the daily chart of Bitcoin. We've been in descent since November. Let's take SPX, which is S&P 500. This is the daily chart of S&P 500. You can see the same thing. We've been in descent essentially since last week in December. That's exactly when Bitcoin started descending. As I said 3 weeks ago as well, the other thing is the strength of the dollar. So if you take the DXY has been strengthening on the back of the promise of the Fed to raise interest rates. Now, what happens when Feds raise interest rate, just for clarity, is that money moves from high risk assets to low risk assets on a general scale. What that means is people move money from stock into government bonds. So stock is considered relatively high to medium risk. Bitcoin is high risk because it's still on the fringes in terms of the equities market. But the money flow gravitates towards low risk once interest rate is high. Why? Many of the institutional investors have hundreds of billions of dollars at their beck and call, and they don't want to risk it all in just putting the money in something that is going to blow off or cost them anything. So if they can get the money into government bonds, it's a lot better for them, because government bonds is low risk, it's guaranteed. It's like just collecting interest on the money. So they are better off putting that money there because it's completely risk off than putting the money in risk assets like stocks, like other forms of equities, and like the crypto markets. So because of that, anytime the Fed is talking about interest rates, you see US dollar go up, and then you see S&P goes down. Same thing with Bitcoin, goes down. Against this backdrop is what's happened on Monday. On Monday, we woke up and found out that Russia was threatening to move into Ukraine. They positioned their tankers there. At the same time, rockets were being fired into Abu Dhabi, the United Arab Emirates, the same day. That is too much bad news. I mean, against the current economic context of the world, that's too much bad news on any day for the markets to handle. And the reason being that the market's already, in trepidation on rate hikes from, the Federal Reserve Bank in the US. Now you have Russia getting to Ukraine. They're not gotten there, but just the fact that they're going to, or they're planning to, is creating a lot of uncertainty. That uncertainty is worse than the actual war, because the uncertainty creates so many variables and so many ideas in people's head. Just the same way when you are processing a bad scenario in your mind, and in your mind you process all sorts of terrible scenarios that are worse off than the actual event that's going to happen. So the same way the market is in this way almost reacting like an individual, where they come up with all sorts of permutations. Okay, Russia gets into Ukraine, European Union decides to join, it becomes a full-scale war. China backs Russia, North Korea, it could cascade into all sorts of proxy wars, and that uncertainty affects the markets. And that's why you saw what happened on Monday. I think this was it Monday? Which one? Friday, Saturday. Today is Friday, so this is Wednesday. Yeah, that's why you saw what happened on Monday. That's wicked crash. I mean, before Monday, Saturday and Friday had been huge dumps already. So when Monday came and that happened, you had that dump. But because that dump was, if you look at S&P, that dump was the market was somewhere around here at midday. It was like 4,200 and something points on S&P 500. So it was a major buying opportunity. The market had not been there since October. So it was a major buying opportunity for many people who had orders on this index. And by the way, many of the institutional traders, especially the longer term ones, only trade indices. They don't trade the actual commodities or stocks. So there was a lot of offers to buy, and it was a very decent trade, because one, there was a gap. The market opened somewhere around here, which was a gap below the actual market close of the previous week. So there was a gap to fill, and the market was opening below. So by midday, the market had rallied. It was the biggest rally since, I don't know, maybe 2013 or something. Very crazy rally, off the back the fact that, okay, Abu Dhabi quelled the rocket missiles, the ballistic missiles that were fired to it, and Russia was in a stance, even though they rolled their tanks to Ukraine. So that was the beginning of the bearish sentiment that started the week. And as a matter of fact, if you're looking at S&P, it's really not gone up. You can see basically just is back to open price for today, but it's basically just trickled down since then. So those factors usually would affect the price of Bitcoin, because if S&P is going down, at least in the short term, you can expect that the price of Bitcoin will go down. In the same way, if the DXY, which is the dollar index, is going up, automatically you will see the effects on Bitcoin, which is making Bitcoin go down. So that is what's happening at the macro level. Now, looking into the future, what is likely to happen? I tell you what's likely to happen. One thing that may happen is, if the stocks continue to go down till we get to March, Bitcoin will decouple. What do I mean Bitcoin will decouple is, Bitcoin will get to a point where, I don't want to call it a point of no return, but to get to a point where miners are no longer selling. This production cost, let me pull back this blue line for a while. This production cost that is in the red shaded area is the miner's production cost. So any miner that's selling below 34K is selling at a loss right now. 34,500 is selling at a loss. So miners will normally not sell below this rate. So any miner that was selling will have stopped at this point, because it means they will be selling at break even, which doesn't make sense. So miners will have stopped, especially major miners. Smaller miners who wouldn't stop will be close to capitulating, meaning they will be selling at a loss. If they're selling at a loss, the bigger miners, of course, will be quickly buying it off them naturally, because the bigger miners are now capitalized. And how did that happen? You probably knew last year that China chased away their miners because they wanted to establish their own cryptocurrency. So because of that, most of the miners left China, mainland China, and moved into neighboring countries like Kazakhstan, Kyrgyzstan, Siberia, in Russia, and the rest of them were displaced, or they were acquired by big venture capitalists in the West. So they moved to the US. So that event has sort of redistributed the demographic of miners, shifting the balance more to the West now. The second event that happened this year, in which you had uprisings in Kazakhstan and that disrupted the price earlier in the month, has also called for additional capitulation of miners, not capitulation really, but most miners have now had to seek funds and open up ownership to Western investors for a share in their company. And I've explained this principle before, and I just think that for the context of being the last session for the month, I should explain the principle again. And it's the principle of supply and demand on the macro scale. Miners are the ones that secure the Bitcoin network, and they get rewarded with Bitcoin. For them to cover their costs, they need to sell Bitcoin. The shaded area with this purple tip is what their cost is currently. So up until this week, all miners have been in profit. On 2 days this week, and for a very short period of time, if they had sold, they will have sold out of, they will have sold at break even. However, because the majority of the miners, which are the big miners, which form more than, they own more than 60% of the mining power now, majority of them now have Western backers that have taken shares in those mining companies. And what is happening now is they are no longer selling. I'm saying that again. Those miners are no longer selling because they now have Bitcoin as part of their inventory. So that Bitcoin is sitting in their assets. So what they're doing is they're selling shares of the company to get cash for operational reasons, and they're mining their Bitcoin and they are stacking it. You would ask me, why would a mining company mine the product and not sell it? Just like, you have a gold mining company, you mine gold and you're not selling it. It's not like gold, because this is a different category of asset altogether. This is a scarce asset in its real sense. And almost 90% has already been produced. So any new production is coming into scarcity, because at least more than 60% is in fixed, or what you call illiquid supply, meaning they are sitting in wallets that have not moved in more than a year, which means they're not likely to move. So those big miners are literally mining and stacking. And when the price dips, like this kind of long wick that you have here, you find the miners, the big miners, with their excess cash coming in to buy. Why? When they buy with the excess cash that they have during the dips that you have or that we've been having now, when the price starts going up, they can sell into strength because they're not selling their own Bitcoin. They're selling the ones they bought during the dip. So basically buying the dip to sell at a higher price without selling this, and they still have their cash runway that allows them to continue to operate without selling. This is, for me, the second wave of halving that we're going to have in Bitcoin. I saw a very nice analogy today on Twitter by someone, and the extrapolation was very simple. We've been trading in that range that I was discussing earlier on for a while now, this range, this weekly range, the range between 70K and 29K. We've been in that range. So the next leg up will definitely take us, at the minimum, will take us to maybe 72K or 80K. As I said, my expectation is at the minimum, we go to 81K or 81,500 at the minimum. Then we'll come down again to probably this same level or to the 41K level before another bounce off. But what will then happen is that because we're going to get into more and more scarcity, the price will only begin to go higher. And the only reason the price will come down is, when you have temporary sell-offs. So in terms of where the market is going, that's where the market is going. Like I said, somebody said, but we're in the bear market. Yes, a bear market is not, how do I explain it now? A bear market is like three types, really. You have the short-term bear market, you have a medium-term bear market, and you have a long-term bear market. A long-term bear market is, where you have multi-year bear markets spanning from 2 to 10 years, or a medium-term bear market is you have a few months to up to a couple of years. Then you have the short-term bear market that goes from a few days to a few weeks to a few months. I think we're in that kind of bear market. And the reason I say that is because we sort of fell into that same scenario when we were here between the months of, between the months of May and July. And I think that's where we are right now. Personally, I don't think we're going to spend months here. I think we have weeks left to spend here. And we actually did get into bear markets at the end of last week, which is when we broke down from 41K. But I don't think we're going to spend so much time here before the market recovers, because on the macro level, when we get to March, if the stock is not doing well, the Feds are just going to come out and say a lot of big words and not do anything, and then the money printing will continue. And the market will go unhappy, because why would the Fed not do anything about the market? The politicians are key stakeholders in the stock markets. Just in case you don't know, US politicians have insider information to the stock markets, and many a times are able to buy ahead of the markets. So they are major stakeholders in Wall Street. So anything that hurts Wall Street hurts their pockets. So naturally, the politicians will gravitate towards Wall Street. So that's why I know that even if the Fed were to taper for one quarter, the stock market will react violently like a spoiled child. And before you know it, the Fed comes back with quantitative easing and more money printing. So it's either of two ways. It's either the market crashes in March and we go into a short-term recession, and the Fed comes back with the money printing to say, we need to support the market and stabilize the economy, and then find an opportunity to continue with the easing, and then explain away the inflation that we're having right now and continue the printing. Or they do nothing in March and the market goes into a frenzy and continues going until they have to do another tapering at the end of Q2. But having said that, that's my overall assessment of what's going on in the markets. Interesting news, a couple of interesting news that I saw during the week. One of them was the fact that Russia was considering how they will regulate crypto. Another one was the British MP that was suggesting that UK should position for being a cryptocurrency, digital asset and blockchain hub Another one was the Belgium, what's it called? MP, parliamentarian, that wants to collect his salary in Bitcoin. Then the mayor of New York, I think, who was sworn in, that said he was going to collect his salary in Bitcoin, is actually going to be buying the dip with his salary, because what it means is that he's going to get more dollars for more Bitcoin for the value of his salary, I meant to say, than if you had to start collecting the salary at the end of the month. So yeah, it's an interesting time. And like I said on the WhatsApp group, it's a time to actually stack a number of coins, because I don't think we're going to see this level for long. And like somebody explained today, when people were talking about Tesla selling, apparently Tesla never sold any of their Bitcoin after that first Q2 last year's test of liquidity that they said they were doing. They didn't sell any more. They didn't sell any more Bitcoin since then. So it's interesting how things are going to shape out this year. I think it's going to be interesting because you have people like Russia already talking about the possibility of stacking Bitcoin as well. You have the El Salvadorians holding their grounds, even against IMF, because IMF came out and said that they need to decouple Bitcoin as their legal standard. Meanwhile, El Salvador is already making great gains on the back of that decision. So a lot of interesting things are lining up for this year. I think it's going to be interesting, whichever way it's going to happen. I think it's going to be a very interesting year on the long run. I mean, it's not going to be all bear markets, it's not going to be all blue markets, but I think it's going to be very interesting. I saw another news where that Apple stock went up because the CEO said that their company is on track to leverage metaverse option. So a lot of things are happening this year. A lot of novel opportunities are happening this year. There was also the other news about Crypto.com partnering with LeBron James to provide crypto education for his charities or through his charities. So it's a time to start. Your portfolio is not a reflection of how much money you have. So the same way you get a feeling of addiction when the price is pumping, I understand, especially if you're a new investor, you get a feeling of dejection and depression when you look at your portfolio. It's not a representation of the true value of things, because the market, as it is right now, the market is completely undervalued and oversold. So it's not an accurate representation of value. You probably see an accurate representation of value in the next 3 to 4 months. So that's all I can say for today. If you have any question on Instagram, just type in your question and read it out. If you have it on Zoom, just unmute your mic and go for it. I think I'm done for today. Thank you very much.
Doc, good evening.
Good evening.
I need some small help. I wanted to buy VVS with my MetaMask wallet on the VVS Finance. Yeah. So I bought Crow from KuCoin.
Yeah.
And I wanted to transfer it through the Chronos chain to the MetaMask wallet, but I added the Chronos chain to my MetaMask wallet. But on KuCoin, they don't have Chronos chain. So when I copied the Crow wallet address on the Chronos chain, my MetaMask, I use Ethereum network to transfer it into my MetaMask wallet. But now I'm not able to use it to buy the VVS because the Crow now is in the Ethereum address. So is there a way out?
Yeah, it's a way out. The way out is to transfer back to KuCoin, then transfer from KuCoin to Crypto.com. Crypto.com app. Now, when you transfer to your Crypto.com app address, don't use CRO network, use ERC20. When you get to Crypto.com app, then transfer from Crypto.com app to your Kronos wallet, to your Kronos or MetaMask using Kronos chain. So what has happened is that, let me just give you an example of what has happened is that MetaMask as a decentralized wallet is able to interact with multiple blockchains depending on which network you switch to. For you to see what you have on Ethereum blockchain, you need to switch to ERC20. For you to see what you have on Kronos, you need to switch to Kronos chain. Now, because they are closed loop systems, you can't transfer across chains except you are using bridging chains, which is more complicated than what I've just described. So the best thing for you is reverse the transaction from your MetaMask Ethereum back to KuCoin, or reverse it back to Crypto.com app for ERC20. So when you go to Crypto.com app and say receive CRO, it gives you an option of receiving in ERC20 or receiving in Kronos. Receive it in ERC20 so that you copy the ERC20 address, send it to that address on the app. Then from the app, send to MetaMask using Kronos wallet. That's the solution.
Oh, okay, I get you. But unfortunately, Ghana, we don't have access to Crypto.com. They don't give us access.
Oh, really?
Whether they are wallets or they are exchange, yes.
Interesting.
So that's the challenge now.
So where is Albert based? In Ghana?
Yeah, it's based in Ghana.
Yes,
Oh,
in
okay,
Ghana.
okay. I have a friend in Ghana that cannot do the same thing as well. But yeah, I mean, if I may just use my little experience to say something here, if it is BVS something that you want to do, I would rather go, but because they don't allow you to use crypto, that's cumbersome. So you have to go the route that Dr. Demi has explained. But if they had allowed that, we could just take the Kronos download the DeFi wallet of Kronos and just transfer it straight away. So I find it much more easier that way. Just move it across through the DeFi wallet and just take it, and it's the same thing.
So
yeah, that one is very straightforward. And they charge 0.002 CRO for it, which is less than maybe around 17.
It's cheaper to use.
Very cheap. Yeah.
Transferring from KuCoin to MetaMask wallet, they charge 20 crore.
That is why I am saying that if they had allowed you to use the Pro app, you just go through their DeFi wallet and send it straight away.
Yes.
The much you pay is probably 1p or $1. So
what you can do now is to send it to somebody who is in Nigeria, who is outside Ghana, to convert for you, and then the person can just do it because it's quite straightforward. You can send it directly to the app, ERC20 on the app. Once it gets to the app, of course, they'll charge you. But once it gets to the app, it's a lot cheaper to move from the app to either Crypto.com's DeFi wallet or to MetaMask on Kronos.
Yes.
It's a lot cheaper.
Oh, okay. Then I'll try and explore that.
Okay.
Thank you very much.
Mr. Wali, do you have another question?
I haven't got any question. The question I have is off this discussion completely, so it's going to be a private talk.
Okay. All right.
Sorry. My question would be probably, when are you coming to Birmingham? Birmingham is quite closer to me than either Manchester or London.
The next one is in Manchester.
Yeah, I had.
Maybe I'll consider Birmingham for Q3. Because I not made up my mind when I was
too late.
No, can you say something about Phantom?
Sorry, I didn't get that.
I said, can you say something about Phantom? Because I learned this is third biggest in the DeFi space also.
Yeah, there are. I've mentioned Phantom. I've already talked about Phantom last year on one of the.
Yes, that's why I bought some.
One of the weeks. I
The only
mentioned.
thing the pandemic want to say is go and buy more.
I mentioned Luna. I mentioned. I think I mentioned Avax at some point. I mentioned Solana. I'm not so heavy on Solana right now because I see that the vesting schedule is quite heavy, meaning there will be a lot of supply in the months to come. So any Solana that I have, I'm going to sell it off at the peak of the market, the next peak of the market. But for ecosystems like Phantom, Atom, which is Cosmos, and Luna, I think they have a lot of things to offer in the years to come, not just this year. So, and the prices are down. The prices are really down now. I mean, take Luna for instance. Luna went from literally from 103 or so to from 103 to $48. So I think Luna is still going to hit at this rate. I think it's still going to hit. He said I hit 37 or he hit $40 before it starts turning back, which is huge. So. But I think that it's a good buying opportunity, generally speaking. Luna is I think Luna is gearing up to probably hit 37 or 32 in the coming days. At that point, I think that will be the bottom for Luna because that will be the bottom in line with the bottom from November of 2021. So yeah, good discounts across board currently.
Well, Dr. Dem,
yes, sir.
what could be responsible?
Sorry?
Heavily. What could be responsible for Luna's current dumping from 103 to 48? I've sold all my enemy.
A number of things. A number of things.
Any news?
Yes, so that's why I said number of things. Structurally, from a technical standpoint, it is made a complete wave upward and is making another complete wave downward. This Fibonacci tells me that the lower limit of that wave is around $37. So, and because it's a higher time frame, I know it's more likely to happen. So, technically speaking, this is the bottom. Okay. If it had bounced off this place, I would have said, okay, maybe this was the bottom because you can see there was another bottom here before, and this was originally a resistance. So. But it didn't bounce off significantly. It's just gone through now. If we open up tomorrow, at this point, if the price opens below 48K or at 48K tomorrow, then it's definitely going to get 37 before it comes back. Fundamentally, there is, if you're familiar with the Luna ecosystem works with a number of stable coins and liquidity provision. And usually what drives the demand of Luna is when there's a demand for some stable coin. So there is a DeFi stable coin called UST, which is tied to Luna. So for you to mint UST, you need Luna tokens. So anytime people are moving money to stable coins, the price of Luna will go up. So you will see that from November, when people started cashing out of Bitcoin, so you could look at from November 21-ish, the price started going up until end of December, when the price started coming down. If you take that correlate and go to Bitcoin on a daily, you see that Bitcoin started tanking from beginning of November. So here was where most people started making up their mind that, okay, this thing is not going up any further. And at that point, so if you look at 21st from here, you can see that from 21st, it's pretty much been downstream for the price of Bitcoin. So a lot of institutions or some hedge funds know this, and they're doing that to, move their money around and maximize their profits. So that's one. The second thing was that there is this particular DeFi protocol called Frog Nation or something like that. So the founder is a geek. But unfortunately for him, the person who is like his second in command, or the CEO, whether the CEO or the CFO, is a known, I don't want to say the word known, but it's a convicted felon, so to say, to use American lingo. Is a convicted felon on a number of frauds. Apparently, the guy also was the second in command of the Quadriga exchange that the owner mysteriously died in the last bull run, the Canadian exchange called Quadriga. You can Google it and read the story. So people are saying the guy has changed his name 3 times now, and he's a serial scammer. So it has brought a lot of disrepute to that particular DeFi platform. And that DeFi platform had a liquidity pool called MIMUST. So that liquidity pool had a drain of about, is it 40% or 60% from its liquidity pool this week alone. So you can see that in the price of Luna, literally in the last 1, 2, 3, 4, 5 days, it's just been downhill. So that's what's happening on what's it called, on a fundamental level. So does that explain? I hope that explains adequately, but that's exactly what's happening.
Yeah, you've done your best. Dr. Oladire can Google the rest.
So because that guy is a no felon, and the truth just keeps unraveling, so people are getting afraid that this guy, if he carry out Monico, so people are are taking to their heels, literally, and they're moving the money out of liquidity pool. That means they will have to sell off their Luna stakes. So that's what's happening. Chinelo, you had your mic on. Sorry.
Yeah, I have 2 questions. Good evening. So one of them is regarding the sorry, the name of this has just skipped my mind. Is LTC up?
Yeah.
Yeah, so I've only just read the email, and it was actually sent on the 24th of this month. And they said that they would seize, how did it, what's it called? That they will cease trading. Yeah, they will cease trading yesterday, 3 a.m. And they said that people should automatically redeem. Sorry, because I need clarification what they mean by this. They said that people should start, is it selling off or redeeming their token? But they said here, users are advised to trade. Yeah, so users are advised to trade their, LTC up token for other tokens prior to the scheduled seize, which was yesterday. But they also said that if users are still holding LTC up after trading ceases, please redeem the token via wallet function, or there's a link. So are they saying that, so since for the people that missed, swapping, that they can still redeem this?
Yeah, please go ahead and do that.
Okay, so that's what it is. Okay, thank you for explaining that. Yeah, and my second question is, where on the coin, where can one find upcoming events in CoinMarketCap?
Okay, so CoinMarketCap is not where you find all.
Okay.
CoinMarketCap, on the other hand, is where you find upcoming events. Let me just. So here is where you find upcoming events, different from CoinMarketCap. So here, it talks about the various tokens and what they have in the offering. You have, you can see upcoming events. You can feature by top 100, top 300, DeFi, all sorts of categories. And then, you can also feature by trading significant odds or potential. So, but usually you'll see they're waiting here. I usually don't come here because it's just too much information for me, except if I'm researching a particular token and I just want to confirm that, there's going to be movement there. Other than that, I don't usually come here. It's also very useful if you want to know which coins are going to move at a particular time, but it's not a given because many a times coins react to the price of Bitcoin. So it's Coin Market Cal for calendar.
Okay, thank you very much.
Any other question before we call it a day? So interestingly, it's one hour already. Okay, so in the absence of that, please, if you have LTC up, I'm going to put it on the WhatsApp chat as well. Please go and redeem it. I don't know for whatever reason, but Binance has decided to cancel the token. So just
it's not just it's not just up. There are quite a few of them. The down one and some other, leverage token that they listed.
Yeah,
So,
I think they're trying to do something with UK government. I think so. So they will be UK government will not allow them to operate here fully with those leverage tokens. I suspect so because I'm a level 2 verified Binance user and I've been asked to verify my identity this week. So I saw a number of stuff going around as well as to people saying that Binance has locked them out of their funds and all that. There's a lot of problem from countries like Nigeria because, and it's not just a Binance thing. People who have been old members who realize when they did that to Crypto.com as well. Many of my friends in Nigeria still don't use Crypto.com because they started asking them stupid questions. It's just unfortunate, but it is what it is with Nigeria. But for people in Nigeria, there is an option actually. Now I'm just thinking about it. If you're Nigerian, you need options on ramping and off ramping. Talk to me later. There are a number of options I think I've used in times past to deal with that.
So, sorry, Dr. Demi, apparently, hello?
Yeah, I'm with you.
Yeah. So the request of Binance for new verification, because I got a notification along that line as well. And I did, but they said they will send me an email to confirm whether it was successful or not. So, and yeah, I've been waiting for.
They will send you the email. They will eventually send you the email.
All right.
I did the first time I did it as well. It said that I couldn't see my face. I was using my driver's license. And it said you don't see my face. Then I did it again. It said you didn't see my face. I submitted like that because I'm using one of the most powerful phone cameras. So if you can't see my face with that, I can't help you. So eventually they came back and said it is now approved. So I left them. Okay. What happens to existing stablecoins if America comes up with digital currency? If America comes up with a digital currency, yes, the digital currency will trade against stablecoins now 1-for-1. Already right now on Crypto.com, you can trade USDC for $1 1-for-1. So it will just be 1-for-1, nothing mega.
Okay.
But yeah,
I was thinking probably the old one like USDC, they may look like maybe fake one, or maybe they are some they are not original or that so some people may prefer the central bank digital currency than those private
you know that
stable coins.
You know that where this is going eventually, there will not be any sovereign money. It will be money by the people. If you just take a bit, take a step back and look at actually where this is all going, eventually all the currencies will fail. And the reason they'll fail is because, it's centrally controlled. And it's shown, even the longest serving currency, like the British pounds, is lost like over 90% of its value as well. So they always fail. So because they always fail, people will eventually gravitate to what works. And for the first time in humanity, we have something that really works in the place of Bitcoin. So because Bitcoin is there as a reference currency, it gives every other person opportunity to create their own metric of value and tie it to the value of Bitcoin. So if all the countries create their CBDC, it's just a digital version of their paper currency. It doesn't stop what's happening in the metaverse, for instance. So But I mean, I know most people would prefer to still stay with USDT than go to the dollar itself, because they're like, yeah, the USDT, I still have some control. The dollar is the bank that's controlling it. So again, USDT may even be phased out in the next 10 to 20 years, because you have DeFi generated stable coins like UST I talked about. That's not really controlled by anything, but it's controlled by smart contracts. So that might even be a lot better than the known USDT that we have today.
So sorry, in addition, I just want to make this clarification. So LTC generally, is it LTC generally or the LTC the derivatives?
It's the derivative and a number of other derivatives that Binance is stopping.
Okay,
so anybody that's bought LTC,
it
doesn't affect LTC then. So if you bought any of those derivatives, you need to go and redeem them immediately so that you lose the value.
Yeah, Doctor, following what you were saying, I don't know if there's another verification email that came in yesterday. So you have to go through another assessment for them to determine if you will continue assessing the following products. So the futures, the leverage token, options, Binance Earn, draw investment. So you have to go through another assessment for them to determine if you should continue using this.
Yes.
So yeah, they are going through quite a lot. And based on that, I think probably that's, again, I don't know, probably that's why they've discontinued.
Yeah, they're working on a number of regulations. I mean, it's just at the end of the day, Binance is still a company. There are different phases of a company in an industry. They've reached that phase where they've become global. They need to interact seriously with regulation, because otherwise they're going to throw that guy in jail, or they're going to kill him. Because it's probably he's the richest man in the world at this point.
Yeah, it's part of the email. They said that they need to meet local regulatory requirements.
Yeah. Yes. So what they've done, what I know Binance has done for UK, for instance, is that they bought a company that was FCA certified and licensed in the UK. Then FCA shouted and said, you can't use that company to operate because we don't have oversight of your parent company. So now that they're trying to settle down in Dubai as headquarters, they will need to meet some statutory requirements and regulatory requirements with Dubai, and of course places like UK and Europe. So I'm not surprised that they're going through this, because SEPA, for you to operate with SEPA in Europe, you need to go through some regulatory clearance.
Yes. Yeah.
So that's why all of this is probably coming up. So thank you very much, everybody. I think it's been a nice session, though not traditional, but still interesting. Have a lovely weekend and see you again next week.
Thank you,
Doc.
Dr. Ladere, you have not paid.
Thank you.
We check the offering box.